Welcome back. In this week's Rebuilding America, a focus on President Biden and co. continuing their pitch on that sweeping $2.3 trillion plan to rebuild America's crumbling infrastructure. Obviously, we talk a lot about maybe some of the flashier pieces of that package that would double federal funding for mass transit and also allocate $80 billion to expand rail service. We know President Biden likes the trains, but less talked about is some of those other projects, including plumbing, piping in America's cities. And for more on that side of the infrastructure package, as well as what remnants here, economic impacts will come from it, I want to bring on Moody's Associate Managing Director, Krummenacker, joins us now. Kurt, thanks for taking the time to chat. I guess we talk a lot about the headline number there and where this money is going to be going, but you think about beyond just mass transit and airports. Talk to me about what has you excited about what President Biden's trying to do with a package like this.
Well, Zach, and nice talking to you. Thanks for having me on. Very excited to talk about infrastructure all the time. Very exciting that it's getting attention once again. It's gotten a lot of attention over the last few years. This is a very big package, but it is spread across 8 years. And so there's a number of factors that are really going to kind of maybe put a bit of a damper on it, because you really need to implement the package. And the devils are always in the details when it comes to these packages, which is what's kind of caused it to not happen in the past. I always like to say everybody agrees on two things when it comes to infrastructure. We all agree that it's great and everybody wants to improve it, and we all agree that somebody else should pay for it. So how do we get from here to a place that we can actually implement? And we really need to look at three things. So it's about the scope of the plan, it's about the spending level, and then it's about the scale. So in this case, from a credit perspective, the scope is really good. The scope is quite wide. It's, as you were talking about in the intro, it's covering not just the sexy projects, the airports, and that get a lot of headlines, the highways and tunnels and bridges that we all get to see, but it also is getting down into the nitty gritty of some of the ancillary concepts that we really refer to as infrastructure. Things like wastewater, drinking water, storm water. These are not the kinds of things people like to talk about a lot. And so that scope, touching down that far is really very helpful.
Kurt, it's interesting. You talk about the scope of this package here. The debate that's happening about what actually should be defined as infrastructure, with a lot of Republican lawmakers saying that it's just about roads and bridges. So can you talk a little bit more about some of these additional elements we've seen the president tap into, particularly around the grid, as well as some of these climate initiatives he's really pushed forward in this plan?
Yeah. So these are important factors, right? These are the unsexy things. Politicians don't get elected by talking about insulating natural gas wellheads in Texas until about a month ago, because it's just not something that is really at the forefront of people's imagination. But these are the things that really instill the strength in our infrastructure, because it's easy for an airport or a high-powered bridge to get the revenue that they need because everybody sees it, everybody touches it, everybody knows it's there. The pipes, the power lines that you're referring to, Akiko, those are the things we take for granted. And so making sure that we're investing in them properly is allowing for an improved level of infrastructure that can be used better, that can be more resilient to climate changes, and that can enhance the economic conditions, all of which drives the revenue, further revenue. This plan would reduce the amount of debt that revenue has to take on. And so therefore, from a credit perspective, it really helps to strengthen in kind of a virtuous cycle.
Yeah, let's talk more about that element that you say nobody really ever wants to pay for it. We'll all agree that it's good. And infrastructure is always crumbling. That's another thing. Those words are always paired. It's always crumbling infrastructure. But when we look at maybe paying for this and what it's going to do to the economy on the whole, you note that it takes a while for some of these projects to get through here. So what's your timeline thinking if we do get this passed and implemented, how long some of these effects will take to trickle through?
Yeah, that's a great question, Zach. I mean, that's a really important thing to keep in mind here, is that when we start talking about this infrastructure spending, it doesn't happen right away. I mean, even once you have a bill passed, infrastructure projects have a long lead time. They require kind of continuous capital spending over a multi-year period in order to make sure that you are going to have the funds available to get to completion, for starters. and they go through a long regulatory review process, an environmental review process in many cases. And so we're really not expecting to see spending hit until at the earliest 2022, but really more like 2023. And so as you start to spread that out 8 years in 2022, you're talking about a period that is not what's being impacted right now by, say, the previous COVID stimulus plan, but rather a longer term impact on the economics.
And finally, airports, as you highlighted, one of the big parts of this plan. It's interesting, the White House talking about how the U.S. airports have, for so many years, really lagged behind some of the other countries. You've talked about upgrading credit in the airport sector from negative to stable. Certainly a lot more people are going to be passing through, but what do you see as the most significant upside, especially tied to this bill?
Yeah, well, we've certainly seen that, right? I mean, coming out of the pandemic, we're seeing a pretty strong, in the U.S. in particular, it's not occurring in other places in the world, but in the U.S. we're seeing a very strong demand for travel, not only now, but also in the summertime. The infrastructure bill actually isn't all that powerful when it comes to the airports sector. The $25 billion that's proposed is really a fraction, that's proposed over 8 years, is really a fraction of what the 5-year needs are identified by the industry. So this isn't really going to be a big push, but it'll be a little bit of a shot in the arm. And the nice thing about the airport sector is that we kind of all pay for it as we go in our tickets. So it does kind of garner that continuous revenue stream. But there's always the need, as you point out, there's always a need for sort of that additional bump, and this plan is giving it that bump.